If you're a real buyer trying to source size in London, what we've been told all year is it's 8 weeks delayed. Sorry. There's a shortage of manpower and trucks in London, which is just the biggest bunch of crap I've ever heard in my life, because they're a T+1 settlement market, where T is trade plus 1 is settlement, and the next day those bars should be moving. But listen, Bank of England has a little bit of shortage of trucks right now and manpower. So, Jesse, I know you need your bars, but 8 weeks, bro. Sorry.
Institutional buyers attempting to source large quantities of bullion in London are encountering unprecedented delays, with wait times stretching to 8 weeks. This disruption in a market designed for T+1 settlement, where metal is supposed to move the day after a trade, raises critical questions about the actual availability of physical inventory in the world's primary gold hub. Andy Schectman, president of Miles Franklin, dismisses the official explanation of a shortage of manpower and trucks as a complete fabrication. He argues that this logistical excuse is merely a cover for a severe physical deficit, suggesting that the bullion banks are stalling because they lack the metal to meet immediate delivery demands. This failure to deliver on time is a significant warning sign that the leverage in the paper market is finally colliding with physical reality. Now, we present the clips from Andy Schectman's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The stress in the LBMA, it shows up not in the cost of the metal, but it shows up in the borrowing costs like we're seeing, or the leasing rates. A lot of people don't know, but you can lease silver for whatever reason, to cover contracts or to fulfill obligations or whatever you need. You can lease silver, and normally the lease rates are sub 1%, right? Less than 1%. But what we're seeing now is 7, 8, 9%, and it was as high as 30% a few weeks ago. But that's exponentially higher than it normally is. And if you're a real buyer trying to source size in London, what we've been told all year is it's 8 weeks delayed. Sorry. There's a shortage of manpower and trucks in London, which is just the biggest bunch of crap I've ever heard in my life, because they're a T+1 settlement market, where T is trade plus 1 is settlement, and the next day those bars should be moving. But listen, Bank of England has a little bit of shortage of trucks right now and manpower. So, Jesse, I know you need your bars, but 8 weeks, bro. Sorry. And I think it seems like because of this stuff, we're getting closer to that moment where the metal left inside the vault is not the metal that's actually for sale. And David would tell you that they have like about 800 million ounces of silver there, of which almost all of it belongs to the ETFs and supposedly and other holders, that it's not for sale. And he would say there's about 140 million ounce free float, but he will question that too. He'll question that, is that free float really a free float? He thinks most of it is encumbered. But once this becomes obvious enough to players, not just guys like you and I asking these questions, or David Jensen, or the pimple on the elephant's ass that is reading all and listening to us, and I mean no disrespect, because it's a growing crowd, but the mainstream has zero idea because of the lack of any measure of journalistic integrity across the mainstream. But once, to me, price discovery doesn't happen on a screen. It'll happen in the real world. And again, talk about disorderly. It will get disorderly fast once the mainstream understands that this game of metal suppression is ending, and ending badly. When you see the Shanghai Metals Exchange consistently pricing silver above Western spot and futures, it's basically the market screaming that the metal is worth a whole hell of a lot more, not only where it's needed, but from where it is being financially priced. And it's the market's way of saying you're full of crap, COMEX and LBMA. And the Shanghai ecosystem is far more tied to real metal moving to real end users, industrial fabrications, wholesalers, etc., where the West sets the paper price largely through leverage paper futures that is now beginning to be viewed as fugazi. The widening spread that we see is a signal of tightness. And it's not a rounding error, man. And it's perhaps the beginning of real price discovery for the first time ever, right? Because silver has never been allowed to find its real price discovery, because I don't care what anyone argues with me on. It is my belief 1000% that it is the military industrial complex of the West that needs silver for high-tech weaponry, period, that has suppressed the price. And it's not just the United States, it's all of the Western military, France and the United Kingdom and all of the strong militaries across the Western world that have used military to in essence, rule the world for a very, very, very long time. And it's not even about the price of it going too high because it's inelastic. You need just a little bit for a very high priced piece of military equipment, but you need it. And if the world figured out just how valuable it was, well, that would be a problem. So if the West and the military industrial complex wants to rule the world, sell all their weapons, not just to the West, but through the NATO allies, and then continue this. And then, of course, when you see countries getting blown up with said missiles, who gets the reconstruction contracts very often? Well, it's BlackRock, which is a military industrial complex. And it's just, you have to take a step back from conventional thought and wisdom and the people giving you advice maybe don't see the world quite the way that you do. And I'm speaking to all of you out there. And if all these, your financial advisors say you're crazy and why would this be true? Because the people that are doing this don't see the world the way that you do. And we've been right, us watching this show, we've been right. And it's about time that we get some acknowledgement of it from the financial media. Saying, geez, we were wrong. Well, that isn't going to happen. Anyways, I would say it like this, man. The East is doing price discovery in the physical, and the West is still doing price discovery in the paper. And the spread is what happens when those two worlds stop agreeing. And if this continues, especially if it widens, and the early stage evidence is that it is widening, the physical market is starting to overrule or override the paper market, period. And when that dam breaks, the move often, I would think, isn't polite. It'll be chaotic and maybe even disorderly. The Chinese, what's it called? Chinese Ministry of Commerce published a white list of 44 companies allowed to export silver, and anything outside that lane is effectively shut out. There were many, 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 many small and mid-sized refiners that would send metal out into the West, and those are done. And even those approved evidently face like a big additional licensing step, which means more time and cost and paperwork, and Beijing can slow things down whenever they really want. One of the things that people missed about this, to me, first of all, China refined 70% of the doré, right? And that were approved are state-run, and the state did something in November that not a lot of people talked about, and that was that they came out with something saying we are going to prioritize exports for domestic necessity, for domestic demand. And that was quiet. But in essence, what they are doing is basically, in my mind, they're prioritizing domestic supply. And this is going to raise the risk premium. Which basically means, am I going to get it, right? And the uncertainty widens spreads, right? And so this is why you see lease rates going higher, and rates and borrowing costs, as we are seeing, are indeed accelerating. And I think it will also accelerate industrial stockpiling by locking in supply, which will tighten the market further. In other words, who the hell is standing for possession of all of this metal? 38 million ounces just in the first 6 days of the January non-delivery contract month, right? And the 68 million or whatever in December all-time record. I wonder, could it be someone like the U.S. government, now that it is a critical mineral, stockpiling? Could it be Tesla, Samsung? We were already told Samsung went to Mexico. As I've been saying on your show before, China's been doing that for 2 years, going right to Mexico, the number one producer. China's too. And Samsung just did that themselves. You are seeing a disintermediation of the market. They're going right to the source, buying doré and concentrate, which isn't reportable, which isn't verifiable in terms of purity and in terms more so of how much. I think the takeaway for investors is the same. When a government turns a commodity into something strategic, and another government adds licensing friction, supply becomes more political, maybe much less available. They call that elastic. And in a small market like silver, it doesn't take much to create a big price response. Oh, you do not buy it to get wealthy. However, you're looking at a once-in-a-generation type of thing.
The global silver market is fracturing as surging lease rates and delivery delays in London expose a critical disconnect between paper derivatives and physical reality. Recent spikes in silver lease rates, jumping from sub 1% to nearly 30%, signal a desperate liquidity crunch within the London Bullion Market Association. While officials attribute 8-week delivery delays to truck shortages, this logistical excuse likely masks a severe deficit of unencumbered metal. This scarcity is confirmed by the widening price premium on the Shanghai Metals Exchange, where physical industrial demand is overriding Western paper pricing. The analysis suggests a key driver of this suppression is the military-industrial complex, which relies on inelastic silver supplies for advanced weaponry. With China now restricting exports to a select list and prioritizing domestic reserves, the mechanism of price suppression is breaking down. As major industrial players bypass exchanges to source directly from miners, the shift from paper leverage to physical possession promises a chaotic revaluation of the market. Let's get back to the interview.
When you see massive physical delivery demand, especially showing up in places it normally doesn't, like COMEX, we were net exporters forever, and now, in my mind, we're importing more than anyone in the world. And since November, I mean, again, where is the media? Every single month, millions upon billions upon billions upon billions upon billions upon billions of dollars. I don't know how many times I need to say this to wake people up. Is coming into COMEX. I've been screaming this for months. That's all you need to know. The people at that level who got that kind of bread, do you really think they're guessing? Do you really think they're guessing on where this is going? When the BIS reclassified gold as tier 1, high quality liquid asset, do you really think the central banks who've been buying hand over fist since 2017 were guessing? The people at that level know the playbook. And I think, the big sophisticated money doesn't give a crap about price. They want, deliver me the metal, period. And they are insisting on delivery. When they insist on delivery, it tells you that this isn't, that the paper price doesn't matter anymore. It's about ownership. And when you add in the math of our debts and our deficits, which must mathematically force some form of a policy response over time. This is one of the reasons the central banks have been buying, and the no counterparty risk, no freeze risk, your asset risk that gold provides, sitting outside the system. I don't know. I just think that you'll begin to see more money rotating into this type of mentality, which will accelerate the move. So, I don't know. Yes, I see gold continuing to march decidedly higher quietly. Silver will get most of the publicity, but gold is still going to, I think, end the year much, much higher than it did start it. Powell, and look, Goldman Sachs came out and said if the market believes that the Fed has lost independence, gold will go to the moon. Well, I would argue the Fed lost independence a long time ago. Why? I mean, you go back through every presidency, there's some sort of back and forth, but not like we see now. But why? Who's Stephen Mirren? Stephen Mirren is the architect of the Mar-a-Lago Accord and Trump's advisor. Where is he now? Oh, that's right. He filled one of the vacancies already at the Fed. So when we talk about where this is going, this is another reason why the world will de-dollarize. This is another reason why gold and silver will keep going higher. They want to drive rates down. And look, no disrespect to President Trump, I'd vote for him again for his policies. However, it is suppression of interest rates that got us in this problem to begin with. It has distorted asset prices forever. But that's what they want to do. They're going to debase the dollar. To their credit, the idiots on mainstream media actually talk about the debasement trade. Way to go, guys. But they missed the whole point with it. They are trying to debase the dollar not only to make manufacturing, or not only, excuse me, I just gave it away there, not only to make paying off the debt easier, but I do believe if you followed some of the stuff that I talk about and go deep into, they want to bring back manufacturing. And it's a very difficult task, but the first thing you need to do besides reshoring all the gold and silver, which is part of my thesis, is to debase the dollar. How do you do that? You let gold go much, 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 much higher, which is the real barometer of the health of a currency, which also devalues the dollar more and more and more and more. You lower interest rates and the dollar just keeps on falling. And I think it's the end of the dollar as the global reserve currency by design. We can talk about that next time, maybe when we see each other in person at VRIC, and maybe we can do a little interview on that. But the bottom line is the Fed has lost all credibility once this move happens, because it is now tied, in essence, to the Treasury, tied to the government. And I think the markets will react violently to that once it becomes obvious. It already is obvious to me. Maybe that's why the market is quietly acting violent. Like today, people don't see it, but the market sees it long ahead of the price. I mean, in the short term, yes, silver can absolutely pull back. It's a thin market. And after any vertical move, you can see what they would call a sharp air pocket, where profit taking comes in. As Johnny said, margin pressure that we've seen recently, headline risk, yeah, it's a top, it's overbought, all of that stuff, you name it. But a $10 and $20 correction in silver is not only possible, it's normal in a bull market. You know, people are thrilled when it goes up $8, $10. Well, we haven't really seen an $8, $10 move, but we might today. It's up $6 already. But these types of corrections is normal. But it's the underlying conditions that I want to remind people that got us here. Tight physical availability, massive delivery demand by the most well-informed and well-funded traders in the world, critical mineral designation, mineral wars between nations. It's not two brothers trying to corner the market like it was in 1980. And what you see is massive delivery demand in a paper market that's been asked to settle real world demand in real metal that it probably doesn't have. That's a problem. And so, yes, if you're asking, could silver drop next week? Of course. I'd actually be surprised if we didn't get a violent pullback along the way. The bull wants to take as few of us along as possible. That's why no one really ever succeeds in investing. Most don't. This is why they have wave theory. Elliott wave, Kondratiev wave, which speaks to human emotions driving the market, fear, exuberance, panic, all of these things. But this is why if you separate yourself from the herd and see the reality, where a pullback doesn't change the bigger picture. And in fact, I would argue in a market like this, a dip is a gift, because this dip would be driven by positioning and leverage and not by sudden surplus of silver, right? So my advice is simple. Don't get cute with timing. If you're a trader, trade it. And that's what the technical analysts are. They trade, right? But if you were trying to protect your purchasing power, to me, the risk isn't that silver goes from 80 to 70 for a minute. The risk is waking up in a market where you can't get what you want at any reasonable premium, and the price you thought you'd be able to buy it at is gone. So yeah, short-term caution, sure, yes. Long-term conviction, also yes. And in my opinion, both can be true at the same time, and in this case, I think they are.
The crumbling barrier between the White House and the Federal Reserve signals a dangerous new era for the U.S. dollar, effectively transforming monetary policy into a tool for political survival rather than economic stability. The analysis argues that the Federal Reserve has irrevocably lost its independence, a shift cemented by the strategic placement of political allies, such as the architects of the Mar-a-Lago Accord, into key roles at the central bank. This fusion of fiscal and monetary policy is driving a deliberate strategy of currency debasement, where interest rates are artificially suppressed not only to service unpayable sovereign debt, but also to weaken the dollar in an attempt to reshore manufacturing. As rates are capped to prevent a bond market collapse, the currency itself is sacrificed, becoming a melting ice cube for savers and foreign nations alike. In this environment, gold acts not merely as a hedge, but as the ultimate barometer of a failing fiat system, signaling that the era of the dollar's global dominance is being dismantled by design. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.